Hey, good morning. Let's go over today's trade plan. So the overnight session so far has been quite balanced, and short term, how the market responds to 28 to 30 is going to help us set the bias on the day. So we're going to be using that area as the micro bull bear zone. As long as ES continues to hold above 28 to 30, there's still the potential for buyers to step in and push it up into the gap fill, the previous VPOC, and the initial resistance zone at 43 to 45. And in the event that we continue to fail at 34.5 to 36.5, the pre-market resistance, and then break down below 28 to 30, then that would signal the sell side in control on the smaller time frames. And we already know that on the larger time frame, since last Friday's 2-month balance breakdown, the sellers have been more dominant and our overall bias in the market on those larger time frames has been more bearish. So if we get that break below 28 to 30, then that break would be in alignment with the overall bias that's active in the market right now. And that could lead to a move back down into the current developing balance area's high volume node at 18.5. And then the first real area of support beyond 18.5 would be the 12 to 14.5 area. And at that point in time, the market could be exhausted. Today is options expiration, quadruple witching. Typically, we get more two-sided price action, and the range potential of the day can be a little bit less as compared to the earlier part of the week. So even if we do get a breakdown below 28 to 30, we can still get responsive buyers active at the 18.5 high volume node area and the 12 to 14.5 initial support. Now, similarly, on the upside, if you get a breakout, you can still get sellers active at 43 to 45. And then once you start testing 50 half to 52 half and 54, 56 to 58, those upper areas of resistance are larger time frame resistance zones. So those have pretty high odds of attracting responsive sellers, especially given that it's options expiration and quadruple witching, which is a little bit more choppy anyway. So our view going into the day is bigger picture. Sell side can still jump in. Short term, how it responds to 28 to 30 is really going to help set the tone. So we do have to be more flexible and nimble with our intraday bias. As I covered in yesterday's video, we are in a high momentum, high volatility market, and that means that we have to be very much in tune with the real-time momentum situation. And because the ranges have expanded, we just have to read the market a little bit more closely in real time. But right now, you can see that since last Friday's breakdown, the market has been developing a new balance area. But as long as on the larger time frames we are holding below 56 to 58, 50 half, 52 half, technically this is still a balance breakdown, bigger picture context. Now, within this range, we can go back and we can test 50 half, 52 half, and 56, 58. That is possible if the buyers really step in and we get that sustained upside momentum. But the overall bias in the market would still remain bearish unless we got, a very strong break beyond even 56 to 58, which is very unlikely today. But again, we'll have to just keep an eye on it and assess the situation in real time. But off the open, 28 to 30 is going to be a key spot. 34 half, 36 half short term. If you get a breakdown, then 24 is a minor support level. It's a breakout area from yesterday. It could attract some buying, so if it starts rejecting it in a bigger way and we get back above 28 to 30, then we know that buyers are really stepping back in, and we're using this as the micro bull bear zone to establish our bias. A move through 24 would very likely result in a move closer to 18 half. And if you're using 18 half as a target, by the way, then it's a good idea to get out ahead of it instead of waiting for exactly 1850. If you are, let's say, short and looking for a place to cover, then instead of waiting for 18 half to the tick, usually it's a good idea to get out 2 to 3 ticks ahead of that level just to guarantee a fill. And on the downside, if we break 1850, then 12 to 14.5 would be very much within range. We also have an open gap there at 13.25. So that's the view heading into the open. Let's see if the buy side can hold ES above 28 to 30. That will really help establish the bias on the day time frame, and we'll take it from there.